How to budget for the new financial year. What are the elements of an annual budget? It can be daunting to start the process of creating a budget, especially if you're not familiar with some of the common accounting and budget terminology you will encounter, so we have provided a glossary of terms covered here, located toward the bottom of the page under the In Summary section of the page. It is important for organizations to create accurate and up-to-date annual budgets in order to maintain control over their finances, and to show funders exactly how their money is being used. How specific and complex the actual budget document needs to be depends on how large the budget is, how many funders you have and what their requirements are, how many different programs or activities you're using the money for, etc. At some level, however, your budget will need to include the following. 1. Projected expenses. 1. The amount of money you expect to spend in the coming fiscal year, broken down into the categories you expect to spend it in: salaries, office expenses, etc. 1. Projected income. 1. The amount of money you expect to take in for the coming fiscal year, broken down by sources, i.e. the amount you expect from each funding source, including not only grants and contracts, but also your own fundraising efforts, memberships, and sales of goods or services. 1. The interaction of expenses and income. 1. What gets funded from which sources? In many cases, this is a condition of the funding. A funder agrees to provide money for a specific position, for instance, or for particular activities or items. 1. If funding comes with restrictions, it's important to build those restrictions into your budget, so that you can make sure to spend the money as you've told the funder you would. 1. Adjustments to reflect reality as the year goes on. 1. Your budget will likely begin with estimates, and as the year progresses, those estimates need to be adjusted to be as accurate as possible to keep track of what's really happening. Why should you prepare an annual budget? 1. It sharpens your understanding of your goals. 1. It gives you the real picture, by accurately showing you what you can afford and where the gaps in funding are. Your budget allows you to plan beforehand to meet needs, and to decide what you're actually able to do in a given year. 1. It encourages effective ways of dealing with money issues, by showing you what you can't afford with known income. A budget can motivate you to be creative, and successful, in seeking out other sources of funding. 1. It fills the need for required information. The completed budget is a necessary element of funding proposals and reports to funders and the community. 1. It facilitates discussion of the financial realities of the organization. 1. It helps you avoid surprises and maintain fiscal control. Some practical considerations. It's important to note that not everyone has the skills or desire to create and manage a budget single-handed. Fortunately, there's help available, both within the organization, by hiring a bookkeeper, accountant, or CFO, and elsewhere. There are organizations like SCORE, Service Corps of Retired Executives, that exist to assist with things like budgeting. Local universities or government agencies may maintain offices that help small businesses and non-profits with financial planning. The possibility of an accounting or similar position shared with or loaned by another organization may also exist. Planning and gathering information to create a budget. The preliminaries. What will you need to spend money on next fiscal year? It is important to know what the priorities are and what makes the most sense for the organization at its particular stage of development. Actually figuring out what you should be spending your money on involves an organization-wide planning process. Estimating expenses. What will it all cost? Step 1. Develop ways of estimating your expenses. Estimate your expenses for the coming fiscal year. In some cases, yearly rent, or salaries, for instance. You'll probably have real figures for what these expenses will be. In other cases, telephone and utilities, etc. You'll have to estimate of an average monthly cost. Be sure to add in some money in a miscellaneous category, in order to be prepared for the unexpected. There are always expenses you don't anticipate, and it is part of conservative estimation to make allowances for them. For budgeting purposes, it may be useful to separate program supplies and equipment from office supplies and equipment. In the case of state and federal funding, at least some office expenses are often considered administrative, and funding for administrative expenses may be limited, sometimes to as little as 5% of your budget. Most nonprofit organizations are required, either by funders or by the IRS, to undergo an audit every year. This means that a CPA, certified public accountant, Must check the organization's financial records to make sure they are accurate, and work with the organization to correct any errors or solve problems. If there is nothing illegal or seriously wrong, the CPA then prepares financial statements using the organization's books, and certifies that the organization follows acceptable accounting practices and that its financial records are in order. The larger an organization's budget, the more complicated an audit is likely to be, the more time it is likely to take, and the more it is likely to cost. An audit of a $100,000 budget might cost $2,000 to $4,000, for instance. That of a $1 million budget might cost $15,000. 1. The most conservative course is to try to stick to your budget, and invest the excess money at the end of the year. 1. This will give you something to draw on in emergencies, or money you can use in the future for something that the organization really wants or needs to do. 1. Invest. Here doesn't necessarily mean putting money in the stock market, which usually doesn't make sense unless you have a lot of money, and you're willing to stay with it for a long period of time, 10 years or more. 1. Certificates of deposit, which give high interest rates in return for keeping money in the bank for a set period. Generally, you can choose a period of from 6 months to 5 years, or money market accounts, which give a high interest rate in return for keeping a large balance, are easy ways for an organization to earn interest on its money, while still keeping it available for emergencies. 1. You can use your surplus to improve working conditions within the organization, raise salaries, add a benefit package, etc. 1. It is important to remember that once you've instituted this type of change, you're obligated to maintain it. 1. You can buy items that you haven't been able to afford previously. 1. You can consider adding positions or starting a whole new program or initiative, perhaps one you've been planning for a long time. 1. If you're starting a new program, you're also implicitly making a commitment to maintaining it for a period of years, so that it will have enough time to be successful. 1. You can think about a long-term capital investment, like buying a building. 1. You could lock in your rent for the duration of the mortgage, probably 20 years, and you might be able to provide the organization with income as well, by renting part of the building to other organizations. 1. Your surplus may not be large enough to enable your organization to make significant changes on its own, but it may provide the means for you to enter into a collaboration with other organizations to achieve a goal that none could have accomplished alone. Devising a budget process that examines the organization's priorities, and using it to produce an accurate, balanced budget for the coming fiscal year will help you keep control of the organization's finances, and will help guide the work of the organization. A rational and accurate budget will allow you to give accurate reports to funders and to spend their money as you have promised. And it will give you clear guidelines about what you can spend and when. Thank you for watching. Don't forget to like, subscribe and comment down below for more finance tips and advice.